Hello.
There he is.
Okay, good. Good morning, everyone, or good afternoon. Shall we start?
Yep.
Okay, very good. So I'm very happy to be moderating this very interesting panel. I am greatly honored to be part of this panel and moderating this panel on session 3. I would like to introduce the panelists. First of all, my name is Shahrokh Fardoost. I'm one of the expert advisors to the EIB GDN project, and I've been involved with this project from its inception, and has been a great learning experience for me. Currently, I'm a research professor at the College of William and Mary in the US. The panelists, I introduced them in the order at which they will be speaking. First is Laura Nelmia Barasa. She's a PhD in economics and has been a research fellow at with the GDN EIB project. And when she speaks, she will also let us know what she is exactly doing right now as a researcher. The second speaker is Soazik Elise Wang Sone, and she's an economist, and she's currently a young professional at the World Bank, and she was a research fellow with the GDN EIB as well. And she will also let us know what exactly she's doing. I think she's doing some very exciting things. Fourth panelist is Gloria Uwingabia, and she's also economist, and she's been working on various research projects, and she was also a research fellow with the GDN program, and she will let us know some of the very interesting things she's doing right now as well. And then I will go to the fourth speaker, Hamidou Jawara, who is a lecturer at the Gambia University, at the University of Gambia, and he was also a research fellow, and has been doing some very interesting research with various research centers in Europe, and he has also done consulting with the bank, and he will also let us know what he's doing currently. And finally, I'd like to introduce to you my good friend, and also who's also been an external expert advisor to this project, is Alexander Saris, who's a very well-known economist and has done a lot of very interesting work, and his PhD from MIT, and he's currently Professor Emeritus at the University of Athens. So we're very much looking forward to hear from him and the experience he has had with this project over the past several years. So the panel 3, of course, is looking at the particular experience, hands-on experience that the panelists have had, either as expert advisor or as researchers, with some of the very interesting projects that have been given to this group of researchers to conduct deep dives, a combination of some sort of research, quantitative research. I wouldn't call them evaluations, but they're probing into finding causality, the link between the intervention and the objectives of these projects, which include both social rate of return as well as economic financial rate of return. Without further ado, I would like to go, we will go to 2 rounds. First round, we will talk about the general projects that the experts have been involved in, and some of the issues that they want to raise in terms of lessons they have learned. And then we will have a second round where we will be going to look at the particular challenges as well as opportunities that they see coming out of the projects that they were involved in. So first, let me go to Laura. You have about, we will take not more than 4 to 5 minutes. And then after the second round, of course, we will go to the floor, so to speak, to get any questions that they might have. And then we will leave about a few minutes for closing remarks. So Laura, floor is yours.
Thank you, Cheryl. So it's a pleasure to be here. And one of the most interesting things I've done in my life was actually the study I conducted. I and my teammate, Ahmed, based in Ethiopia. So what we did was to study the impact of mobile-based customer experience platforms on farm performance. So we looked at that in terms of the number of customers and sales revenue. So the company that we focused on is Agile Limited. So this is a startup, a very innovative startup, and it was the first company to introduce mobile-based customer feedback platforms in Kenya in 2015. And so what was interesting to us was this was a business-to-business impact evaluation. There were some interesting things that we learned along the way. For instance, we had a very short time to build trust with the company and to try and identify the farms who took up the service. And again, since it's a very new concept in Kenya, it took a bit of time for us to understand the technology and the technicalities involved. So we had to make many visits and to try and understand exactly how this mobile customer feedback works. So in Kenya, most likely you heard about M-Pesa. So how this happens is that when a customer buys a commodity or a service and they make a payment using M-Pesa, it triggers a mechanism where they get the question based on the Net Promoter Score, asking whether they will recommend this service or product to someone else. And this was a big for us, first of all, to understand, and we were interested in trying to track the users of the service at the individual level, but this was not very easy to do. It was not possible. So we just focused on the business-to-business mechanism, and we also noticed that most of the firms that took up this Agile service were in the financial sector. So these included banks, insurance companies, cooperatives, deposit-taking institutions. Some of them were non-deposit-taking institutions. And as we know, such companies have a lot of formal processes before organizing for any meeting or having any interview. It took quite a bit of time, but with the help of the startup, Agile, we were able to contact several firms, but not all of them. And the sample size was rather little, especially for the treated farms. These are the farms which had taken up this service. We also learned along the way that the service, of course, is on a rolling basis. It's renewable every year. So a farm that benefited from the service in the previous period did not necessarily have a contract in the current period. So this affected our study in several ways, particularly to do with the sample size. But then the interesting is with a few treated farms that we had, we were able to actually find that there was an impact, a positive impact on the outcomes we measured, which were sales revenue and the number of customers. And again, since we noticed that some farms were saying that they used the Agile service, but they were not on their database, so there might have been another competitor or someone else who was offering a similar service, or a misunderstanding of what the mobile customer relationship management system was all about. However, we also had we had to work with recall data for us to try and identify the differences in the outcome measures. So what was nice was that we were able to find several firms which used the Agile service, and this helped us to carry out an exploratory diff in diff analysis, which still maintained the same conclusions that most likely there's a positive impact. However, it would be nice if we were able to do this conclusively, but I believe that this will take time. If you were to study the same company, they are still looking for customers in the market, so the sample and the uptake is still rather small at the moment. And we also noticed that most firms were not keen on having online surveys. They wanted to see us face-to-face, maybe because of confidentiality and just to establish trust. So these also took a bit of time to make the appointments and the arrangements. But ultimately, to conclude, what is interesting is that this study has gained more relevance during the pandemic because the government of Kenya has urged consumers and companies to engage in mobile-based transactions for payments and for anything else. So this means that we could say that Ajua has a very promising future, because in this way they can be able to valorize their service, and I believe this is of use. And particularly when we think of policy, it will be important to consider how enhancing customer service through Ajua and any other firm that may have a similar service can benefit the end users. Thank you.
Thank you very much. Thank you very much, Laura. Now we go to Elise. Please just take 30 seconds to tell us where you are and what you're doing right now, and then tell us about your experience with the project that you worked on the deep dive in the EIB GDN program. Please go ahead, Elise.
Thank you very much, Sharok, for giving me the floor. So I'm currently Swazik Elise Wangsune. I'm a young professional development economist at the World Bank Group in Washington, D.C. in the Social Sustainability and Inclusion Global Practice, where I'm basically working on intervention, assessing the impact of development intervention on vulnerable population with a focus on fragile setting. And I also have a very keen interest on impact investing, which is becoming very trendy in development. And recently, I had the possibility and the opportunity to be an EIB DDN fellow, where I work on a very exciting project in Kenya, especially in Kibera, which is one of the largest slums in sub-Saharan Africa. And under this project, what we actually did together with my teammate, Timothy, which was actually based in Nairobi, is that we collected information on small-scale artisans. And before even I delve deeper into the project, I want to give a little bit of a context of craft artisanship in Kenya. Basically, in Kenya, you have almost 2.7 million of people working in the informal manufacturing sector. And out of those 2.7 million people, 0.5 of them, which is almost 19%, are employed in the craft sector, which is the second largest force after agriculture. So there's actually a great potential of people interested in working in that sector. But the key hurdle that those artisans or those workers are facing is the lack of, first of all, information, the lack of access to an appropriate market, the lack of skills, the lack of finance. And in this landscape, Soko, which is a startup which was created in 2011 by 3 female social entrepreneurs, intend to bridge the gap between artisans, allowing them to access local and international market through their mobile innovation platforms. So what we were intend to do under this project that I really had the chance to work on together with my teammate is that we assess the impact of how Soko, the training that Soko is giving to artisans, the lead artisan and the worker artisan has on the vulnerability to poverty and the access to income and access to skills. So we basically go for a mixed approach, a quantitative approach and a qualitative approach. So we use key informant interview, focus group discussion, but also quasi-experimental impact evaluation techniques to build a so-called control group of artisans that we actually use together with a chairperson to identify, so that we are able to assess the impact that the Soko company has on those workers. And we found quite interesting result. What we found is that artisans that were affiliated with Soko were less likely to be vulnerable to poverty. So they were actually better off as compared to artisans that has almost the same socioeconomic characteristics than the one that were working with SOCO. So that was quite interesting for us to see that the SOCO company has this potential impact of lifting out artisans out of poverty. But what we also find striking is that the female to male ratio was quite low. So for 13 male artisans, we had only 1 female artisan. And we also found that even despite the very low size of female artisans, that those female artisans are worse off as compared to their male counterparts. So actually that shows that there needs to be more sensitization campaign in Kenya, especially for the craft sector, to attract more female artisans into the sector, because it has a very high likelihood of lifting artisans out of poverty. And we know from research that women, when they're better off, is also better off for the society and for the children as a whole. We also face some challenges when we were undertaking this study. The lack of an appropriate sampling frame, which prevent us to infer risk to other contexts apart from Kibera. And we will discuss it maybe later on in the second round of discussion about challenges and way forward on how we can improve such kind of study related to artisan or small-scale artisan in other contexts apart from Kenya. Thank you. Over.
Thank you very much, Elise. Now we go to Gloria. Please take 30 seconds to introduce yourself and tell us what you are doing, and then we would like to hear from you about your experience with the deep dive you took with the EIB GDN. Please go ahead. You are on mute, I think.
Sorry. So thank you very much, Sherlock. It's really a pleasure to be here today and share with you what Guylaine, my teammate, and myself did in Côte d'Ivoire. So joining you from Brussels, where I've been working on the evaluation of financial and economic policies with ICF. So I'm going to take you through some of the key challenges and some of the key opportunities we encountered while measuring the impact of the EIB's investment into PAMF. So PAMF is a microfinance institution that provides financial services to underserved communities in sub-Saharan Africa. But before I dive into the specifics, I want to take a quick step back and really give you an overview of what it is that the EIB wanted to get out of these measurements. So right from the start, the EIB told us that they wanted something different. So they wanted us to really move away from traditional ways of measuring impact, which most of the time are time-consuming, very expensive, and very much focused on reporting to the investor, solving the problems of the investor, rather than creating value for the investee or even solving the problems of the investee. So really, it's in that spirit that we designed our research questions. We prioritized the questions and hypotheses that the investee, the microfinance institution, wanted to prioritize. We discussed with them, and we really tried to understand what they wanted to know in terms of impact of the products and services. Really interesting as well if you want to get them on board and get them excited about the project. There's one thing I want to highlight here is that it's never too late or too early to measure impact. So while we were having those discussions with the MFI, we talked about measuring the impact of some of the already existing products and services, but also talked about measuring the impact on some of the key pipeline projects like mobile banking at the time, or even measuring the impact of some of the ideas or projects they wanted to implement, but for which they wanted to gather more insights. So in the end, they were interested in understanding whether and how existing clients had benefited from borrowing. And we designed our questions around those interests. Then we moved on to designing the research, and there came our major issue, which was data availability at the level of the MFI. So we had planned normally to run a regression discontinuity analysis, but when we started looking at the data that was available at the level of the company, it became quickly clear that we didn't have the data that we needed to be able to run that methodology. And we had to move to some other methodology. So in the end, we opted for a mixed method research. And we really think this was more appropriate because it was really proportionate to the data that was available at the level of the company, and at the same time, right-sized to really the company and the scale of impact that we were trying to measure. So one thing I want to highlight here is that you have to be open-minded when doing research in these types of contexts, because most of the time you're just not going to have all the data that you want. So you really have to be method neutral, if I can say so. And it doesn't mean that you have to make a trade-off between academic rigor and real-time needs, but you have to find a method that is going to be right-sized to the company, but at the same time, academically sound and robust. Then we move to collecting the data. And here I want to highlight one key challenge and another opportunity. So the challenge was when we started piloting our survey, which by the way, we had in French and another widely spoken language in the region, it became quickly clear that the respondents were struggling. They were struggling with the questions, some of the technical questions. And then we decided to translate the questionnaire into the respondents' mother tongues, which was quite easier because the information was already available at the level of the MFI. But then we had to make sure that our enumerators could speak those languages and could conduct the survey in those languages. In the end, it worked out well because then the enumerators inspired confidence to the clients, and they were able to engage in conversations and even gather more insight than what we had already planned. My last point is on an opportunity. We ran a mobile phone-based survey. So in the end, we were a bit worried because we're like, okay, this is a rural area. Maybe we're not gonna have, maybe not all the people do have a mobile phone. But then in the end, it really worked out well. So what I want to say is, what is interesting today is that mobile phone penetration is very high, even in rural areas. It's very easy to conduct, very efficient, very flexible on the respondents, and it is worth considering. Thank you. Over to you, Charlotte.
Okay, thank you so much, Gloria. Now I wanted to go to our next panelist. I don't think he is on. I don't see him on the screen. So let's we go to Aleko. We go to you now. Okay. And then when Hamidou comes back, then we go to him. So please go ahead.
Thank you. As Sharok indicated earlier, I was one of the expert advisors for this project. And this project was, this project was about financing the private sector. Now, going a little, sitting a little back, I would say that the major development issue that motivated the project is how to promote the small and medium scale enterprises in Africa. And that is considered to be a major way to promote development. And finance has been thought to be a major constraint to SME growth. So the EIB, wanting to alleviate the financial constraint for small and medium-scale enterprises, thought that since targeting individual SMEs was difficult because of their size, the method that has been used and has been thought to be interesting is the so-called indirect financing method or intermediated financing method. Namely, the major financial institution finances an intermediary, which could be a fund, an investment company, which in turn finances smaller who do a particular thing. So this is the model that has been used, and the major issue underlying the whole project is whether this model is successful and whether it has an impact. Now, the question, of course, here from a more conceptual perspective is how do you measure the development impact? Because you have two levels of intervention, one at the fund level and then another one at the SME level. And it was decided early on that the project would focus on not on the companies, the investment companies financed by EIB, but on the particular firms that were funded by the investment company and the agents that firms. So in the project, the development impact measured the changes to stakeholders who were affected by the SME actions following the finance. Example, for instance, there was a study of a firm that extended internet access to students, and the issue is how were the students affected. And another example already mentioned, I think by Elise, was SOCO. SOCO was a company, again, which was financed by the intermediary and extended finance to individual artisans. And the issue was how were these artisans affected? This brings an interesting question. Of course, there was an impact on those people, less, smaller, or larger. But an interesting question is, would there be an impact or would there be an influence on these stakeholders if they were not financed through this particular way, but through another way? And that actually is an issue that we haven't dealt with because we don't know which other way stakeholders could be affected. But this raises the issue of what is the best way to evaluate this intermediated kind of model. And although we set up in the beginning to try to deal with it, I don't think at the end we have a definitive answer. We just have examples or cases where several firms were financed and those firms had an impact on their stakeholders. And now, of course, to assess any impact on any stakeholders, the standard issues, you need to compare the treatment group of beneficiaries with a control group. And of course, this raises the issue of the control group. Now, here is one interesting question. The companies usually are not interested in the control group. They're only interested in the treatment group because those are the stakeholders they financed and they are their clients. So that raises an interesting issue of how do you get your control group. And there was a variety of methods utilized in our project. Many of them, I think, were quite successful. And for that reason, I think there was a necessity to conduct person-to-person surveys for several of these projects. And again, now this raises new issue. If you are to conduct surveys because the company data is not appropriate for what you want to do, there was company data for many of the projects, but it did not deal with the issues that the researchers were interested in exploring. And so that necessitated some new surveys. And when you have a new survey, you raise issues like the sample frame. The sample frames were not always complete. And Also, of course, the control group sample frame was even less complete. And this raises the issue of how you compare the two groups that you eventually sample. And of course, you need some kind of balance test. And this is one of the issues that I think it's a very real issue in all of the studies that I looked at. And that is whether there is some kind of balancing exercise. And that is real necessity. Now, there are other techniques that can be used for using finding control groups, like the matching techniques, and there were several cases of those. But when matching techniques are used, you need to do it on variables that do not determine treatment and do not change after treatment. And this sometimes presented challenges. Now, the most difficult part, I think, of doing any of these studies was to elicit interest from the stakeholders, in particular from the companies that were financed, that what you are doing will contribute to their business model. And I think that was mentioned by others who experienced it firsthand. But I think that's a key thing. You cannot approach a private company with an interest in looking at some part of their business unless the issues that you're raising are relevant to their business model. And I think that is a very important part of any research into private sector impact assessment. Now, what did we learn from this project? I think for instance, have we found that the intermediated finance model is an efficient way to promote finance to SMEs, and has it had large impact? I don't think we found out that yes, this model reaches a lot of SMEs whose scale of operation perhaps would not be as large as with the intermediated finance model. But on the other hand, several of these impacts could have occurred in the absence of the particular intervention. So, for instance, on POA Internet, which targeted schools and students, the issue is not so much whether the intervention had an impact, but an issue is, does it have an impact under the particular structure? And this is not clear because probably there would have been internet without it, but we don't know how it would look. But what we did find, nevertheless, is that the intermediated finance model does have an impact, and it does seem to produce considerable benefits to the stakeholders. On some challenges, I think we found that the period of assessment was too short. Now, private stakeholders, private companies want answers to their issues rather fast. And the researchers know that this cannot be done too fast. But I think these constraints, I think the projects produced a wealth of very interesting analyses which found impact and information that I think was relevant to the objectives of the company. And as such, I think they were very useful. For instance, we called these types of analysis deep dives, and there is a lot of literature on those. This is kind of an intermediate approach between the complete impact evaluation. And it looks like this is a useful way of going for the private sector. And it's a way that can be easily repeated over time to see how things are going and whether you can have good suggestions, whether they can produce good lessons for the companies so as to adapt their strategy. I will stop here.
Thank you very much, Leko, for sharing your wisdom, which has been very important to all of us involved in this project through the past 3 years. my friend and panelist Hamidou has been coming in and out, but it looks like he's now in. Very good, just in time. So please take 30 seconds to introduce yourself and tell us what you're doing, and then go to the points that you want to raise in this first round. Thank you.
Thank you, Saruk, and hi everyone. Actually, I have been having network issues, so I was going on and off, but I'm Hamidou Jawara, a lecturer in economics at the University of the Gambia and one of the GDN fellows, and I worked on a project in Senegal. Currently, I'm in the Gambia, and right now I'm doing an impact assessment on the impact of COVID-19, for instance, on the perception of youths on migration in the Gambia. That's one current project that I am working on. Yeah, so like I said, the project that I worked on was a project with a farm in Senegal called Nest. And actually the CEO, I think, was in one of the sessions yesterday. So what Nest does is that it provides maternal and child health care services. And then it is based in Senegal, Dakar. And one of the other things that it does is that it provides education, or information on reproductive health. And they do this information campaigns where they target adolescent girls and young women. In our deep dive, we focused on an area that was of interest to the farm, and this we arrived at from the inception meetings, that were organized by the EIB, where we participated in, and from where we obtained some of the interest areas of the farm, and then decided to focus on one of the areas that we thought was feasible for us to look at, given the time frame that we were working on. Right. So one of the services that we looked at, it's this maternal care service, which is being provided by the company, where you have that a midwife rather than a gynecologist would lead the provision of the service. However, one of the issues the firm has been grappling with, it's uptake of the service, and this is because there is a lot of negative perception in Senegal around midwives, particularly those that are in the public sector, and they are using information campaigns whether they could change that. And then what we did with the study is to check or see whether they can alternative ways of presenting information to the potential clients, and we relied on the use of short stories rather than just providing standard information in basic form. And then we use experiments, willingness to pay experiment, to evaluate the extent to which such information could have an effect on the potential client's willingness to take up such services, as well as their willingness to use them. And then we find little effect.
I think we lost Hamidou for a second. I think he will probably try to come back, but let's continue. I would like to maybe while we're waiting for Hamidou, we could start our discussion on the second round questions. And on that one, I would like to ask our panelists in the order that they came in, first Laura, then Elise, Gloria, and then if Hamido is back, and otherwise Aleko, on maybe focusing on some one or two issues that you think would need further attention in order to improve the deep dives, that either in terms of methodology or data, something that you learned and through your experience, and you think it would be much better if this particular challenge was met somehow in order to improve the results and also make it more useful to both EIB and to the client that or the businesses that you studied. So with that question in mind, what are the key challenges and how to meet them? What is your suggestion? We start with Laura.
Carol. So I believe that one of the key challenges that I believe most of us faced had to do with a small sample size. And particularly in our case, we relate that to having a very short time frame to clearly communicate what we wanted to do, and also agree with the companies on the expectations. And also just to create trust or to build trust, I think it's important to have a bit more time, because that way we will be able to understand and know who the target customers are and who the customers are in a given point of time. So I think for our case, we feel that if we had had more time, we would have had an even better sample size. And one learning also would be that when we conduct these sort of studies, it shouldn't just be a one-off. If possible, in the next cycle, another group should be directed towards the same company to tap out more impact, because most of them are long-term and might not be identified in that given time frame that we have. So I think such a long-term relationship could be built, and that can help future researchers. Yeah. Thank you. Over to you.
Okay, thank you, Laura. Elise?
Thank you, Sharok, for giving me the floor. I think I'll follow up on what Laura just said about the time frame, and Aleko said it very clearly. One of the key drawbacks of most studies, especially in our studies, that we were not able to properly carry out a baseline survey to measure outcomes and characteristics prior to the interventions, like what were the socioeconomic conditions of artisans at a specific time. And one of the reasons is that we didn't have enough time to carry out a baseline survey and an analyze survey. But what we've done to overcome it is that we collected information on prior socioeconomic condition of artisans, so that we are able to see whether before the intervention, when picking up our control group, they are similar before, and whether SOCO is really making the difference. I think that's one of the things. And another thing that I think is not necessarily specific to our study, but in most study in development impact evaluation, is that there is a lack of cost benefit and cost effectiveness analysis after the development impact has been assessed. So for instance, in our study, we were able to look at the benefits of SOCO. We assessed the impact on vulnerability to poverty, on income, livelihood, and savings. But we didn't follow up with a proper cost benefit analysis, like trying to see what was the initial investment of SOCO on that business and what are the benefits that were reaped, to compute, say, internal rate of return or benefits cost ratio of net present value, any kind of financial indicator which are actually helping us to see whether such investment are cost effective and whether there's a cost benefit in investing on those companies, and how long it takes to actually have those benefits that we found. So I think moving forward, it will be good for the entire development impact investing arena to move beyond the solely assessment of the benefits of an intervention, but also trying to do cost benefit and cost effectiveness analysis. Over. Thank you.
Gloria?
One of the key challenge I want to talk to, and everyone actually has mentioned it, it's data availability and the problem in actually designing a sound quasi-experimental methodology. So I'm going to reflect on our own experience trying to actually design a regression discontinuity analysis. So for some of you who are familiar with this methodology, you sort of need to have a screening threshold that determines eligibility into the program. So over that threshold, people are eligible to participate in the program, and under that, they are rejected, or the other way around. It depends on the program. But when we started discussing with the MFI to sort of understand the selection methodology, it was a bit unclear. So in most MFIs, most of the time they use a creditworthiness score. And if you actually meet the score, you are eligible to receive a loan from that microfinance institution. Otherwise, you are rejected. But at PAMF, what we found out was they of course, had that creditworthiness score, but at the same time, they had subjective measures. And those subjective measures were, for instance, perception of the client by the peers, or even the reputation of the client, which made it really difficult to actually design the methodology. So one quick thing I want to say is, I think that DFIs like EIB can actually help these low-tier microfinance institutions through the intermediaries, help them design appropriate databases, help them. So the reporting side was really difficult. Over to you, Charlotte.
Glad that you were able to rejoin before you get disconnected again. So maybe you could quickly share, combine the last point that you were about to make, and then with the point that I've asked the panelists on the second round to focus on a particular challenge that, if met, would make the deep dives even more useful. Now to you, Hamidou. You are on mute. Hamidou, I think you are on mute. Okay.
Okay, so what I was saying before I went offline was that with the study that we did with NEST, we actually found a little effect, on the intervention that we provided, which is this presentation of information in the form of such studies, and then saying or evaluating to what extent that can enhance the willingness to pay potential clients. And I said we found some little effects, but we couldn't make anything big out of them because of the constraints that some of in this program have already highlighted, which is the issue of the small sample size. Right? I think with regards to challenge, that is the main challenge. And then for us, because we were using an experiment, we also needed to recruit participants. And given the subject that we were interested in, the participants that we were targeting were pregnant women, for instance, in their first and second trimester. Right? And the local context that we were in was such that women don't disclose issues regarding their pregnancy, to anyone just like that, particularly people that are out of their families. So this really made it difficult for us to have or for us to make a lot of success with our recruitment. And then, we even tried some innovative ways, to boost the number of, target participants that would sign up for the experiment, such as involve a famous person like an actress to make a 2 minutes video for us, to encourage women, the women that we were targeting to sign up for the experiment. And that actually had some effect at the end. But even with that, a lot of those women that sign up, never showed up for the experiment. And then we had very attractive incentive packages in the experiment. That included transport allowance, participation fees, and also randomly given gifts to potential participants, right? And due to that, we even had to change, the kind of randomization method that we wanted to use, to adapt it to the new situation that we found ourselves in. So it really shows that when you are working with private firms, particularly in the developing world context, it's important, for researchers be very open to adapting their techniques to the situations that they find on the ground, in a way that it doesn't, of course, compromise the methodological rigor that is needed in the exercise, right? And then just to say that incentives actually helpful, right? And to design better incentives, you need better understanding of the local context. Yeah, and I think local researchers are also useful.
We lost Hamidou towards the very end of his intervention. So while we're waiting for him, I'd like to go to Aleko for your couple of minutes, your second round intervention on the challenges.
Yes. Well, in projects like this, or in projects where you don't have a lot of time or not a lot of quantitative information a priori, you have to put much more emphasis on conceptual framing and theory. So I would like to highlight something that perhaps is understood by all as being important, but it wasn't highlighted, namely the theory of change that was behind the interventions we talked about. That, in many cases, proved extremely useful in identifying the variables that one needs to measure or needs to monitor. And that is very important and gives a lot of suggestions as to what is important to monitor. Because, in any situation, there are many things that you can look at and monitor, but what are the important things? So I would put a lot of emphasis on the theory of change, namely how would the changes that are thought to be of importance for impact are implemented in what stages, in what time frame, and I think that gives you a lot of guidance. The second point I want to make is about baseline data. I think it was highlighted by one or two of the participants that there was very few baseline data, but the companies or the firms that are financed, they have a set of clients, or at least they have a market that they're aware of and they are targeting. And of course, they have clients. And I think it would be important to try to discuss with these companies at an early stage that they need to have a bit more information on these clients than just their addresses and perhaps some very basic information. I think a little bit more information would make a lot of difference to any assessment of impact at a later stage. Okay.
Thank you, Aleko. I think Hamido, I think at the end wanted to say that familiarity with the local context helps a lot with the studies. So this one of the innovative parts of this EIB GDN project program was to make sure that there is a matching between the research fellows and the projects, but that takes advantage of their familiarity to the extent possible with the local environment. There has been a question by one of the members of the audience to Gloria regarding capacity building, that what can EIB do in terms of capacity building for the finance companies in order to improve their ability to, I guess, be able to track and their development impact. Just take a minute, if you could, in that regard.
Yeah. So. Yeah, so my opinion is that the financing provided by the EIB should always be accompanied by technical assistance, and great emphasis should be put on technical, helping these MFIs have, for instance, well-maintained databases. But at the same time, as I've mentioned in the chat box, these are intermediated estimates. And most of the time, the EIB is just going to channel, the EIB channels fund through an intermediary. And it's the intermediary that's going to have a lot of contact with the investee, in this case, the microfinance institution. So I think it's difficult for the EIB to intervene directly, but I do believe that something can be done at the level of the intermediary so that the provision of financing is actually accompanied by also some sort of grant for them to help these MFIs increase their capacity.
Hamido, you're back. I made the point that you wanted to make, wanted me to make. Do you want to add something? Okay. Are you on mute, Hamido? Okay, I think maybe he cannot hear us. Anyway, Aleko, I would like to, there was one question posed to you, Aleko, about the evaluation of the intermediaries, which is, I think, is a huge job. It's not really something that you can do with a deep dive, so that probably has been done or is being done by EIB's own independent evaluation. Those type of evaluations are, actually are quite complicated. But the question to you was that do you have any main important points to make on this issue of evaluating the intermediaries, and how would one control for non-financial intermediaries? I think that was the question that was raised.
Yeah, well, this is a very different and difficult question. I think the EIB has done some of that. I haven't seen the study, but it would be interesting to see it. But I think that would entail a completely different scale of operation. On the other hand, it's not clear how many of such projects exist on the EIB side, or how many intermediaries have they financed in Africa or elsewhere. But for the purposes of this project, I think the issue was not asked at that level. We heard yesterday from another panelist that the SMEs financed by the intermediaries who turned out to be profitable also were the ones that had the largest impact. There was a study that showed that there is a clear correlation. So perhaps that suggests that one of the indicators of impact is to see how many of these SMEs were profitable. But clearly, there are lots of SMEs in any one country, and any intermediary will only finance a few of these. But I don't think we want to extend the discussion to there. It's a much more difficult discussion, and I don't think we are there for that at this point. I think we should keep it with the beneficiaries of the SMEs themselves.
Yeah, thank you. I think I recall that there is EIB's independent evaluation had in fact conducted a thematic evaluation in this area on the SMEs, and also it has been done by the independent evaluation for IFC at the World Bank Group on the SMEs, and looking at the both financial and non-financial intermediaries. So those are type of studies that will not be is not really possible for the deep dive type studies to cover. And very expensive, and it takes a long time to conduct them. But I think there are some evaluations that are available and are there, and now whether they're done rigorously or not, I don't recall having looked at that. Now we are basically reaching the end of our session. I wanted to see whether we can have our last round of maybe one point that we want to make as a parting message for our audience. I think my own experience has been quite positive with this research program. I think I've learned a lot by interacting with very smart researchers and very experienced and smart advisors that we've been working with, and also with the EIB staff and GDN staff. It's been a great pleasure and learning experience, and I think definitely both EIB and GDN can build on the experience that and learn what we have learned so far in the past 2.5 years, 3 years from this effort to build on it going forward. One thing that was mentioned yesterday that was quite interesting, that despite all the turmoil that is happening in the global economy and in the world of development and development finance, impact investing has held up and has not been, at least up to now, been adversely affected. There was an earlier estimate by OECD that indicated that development finance during 2020 has suffered a big negative impact from COVID and the recession and all of the interruptions that caused. They estimated that development finance during 2020 would be lower by about $700 billion compared to 2019. That's a huge number. Of course, that includes foreign direct investment, includes also remittances, and also exports earnings, including from tourism and so forth. So developing countries have greatly suffered, and I think also the debt issue is looming, and I think there is a potential for a very serious debt crisis, which could affect not just the low-income countries, but well-to-do or economies with much stronger financing, like upper middle-income countries as well. So it's a very challenging time, and I was very pleased to hear that impact investing has not yet been affected, and hopefully it will not be, because the experience that we've ourselves witnessed is that has been fairly positive, and some very good projects are being implemented that is really affecting people's lives. Now we are just debating over how much improvement. It's not, we in the past 3 years, we have not seen any project that has had a negative impact that we could measure. It's always been this, we were trying to find the size of the positive impact. So let's take 1 minute each to make our last point. This is a great opportunity for us to share our knowledge with the audience. I start with Laura.
For my context, I will say that one of the things I've learned as a researcher is that when it comes to M-Pesa, there are endless possibilities. I've seen many studies where M-Pesa reduces bribery, where messages, SMSs help people to go for act as good reminders for people to go for healthcare clinics. And particularly when it comes to the mobile telephony, as Gloria said, the penetration is very high, and this can always be used to our advantage. And for me, what is very encouraging is to see that our government actually leveraged on the use of M-Pesa to curb the spread of the pandemic of the COVID-19 virus in Kenya. And that made me realize that we might be onto something bigger. So for researchers, we can always think outside the box when it comes to the questions and effects that we want to test. And lastly, I think what has been missing for me so far is we've not been able to have a good framework to look at social impacts. So we have not, we were not as lucky as Elise and her team who are able to look at the individuals. So it would be nice also for EIB to consider funding another round for us to be able to see how these impacts trickle down to individual users. Thank you, Cheryl.
Thank you, Elise, for your final thoughts.
Yeah, I would just say that impact investing is gaining the momentum in development finance, and I think more initiative, just as the DDN EIB collaboration, to look into the to take like a quantitative lens to look into the impact of such investment, social economic impact of such investment on artisans, on workers, on people should be encouraged. And I think from my experience from Soko, what I learned, and I've been lucky to work in Kibera, as I say, is the largest slum in sub-Saharan Africa, and that training artisans by allowing them to access market and giving and providing them skills actually help them later on to improve their socio-economic condition and lift their families, their children out of poverty. So I think this is an exciting findings, and I believe that more and more similar studies should be conducted in other contexts to see and identify what exactly works and how does that work. And I think one last thing is also, I think Aleko mentioned it, the theory of change should be clearly build up, but one of the most important things, and what I believe was lacking, is the identification of mechanism, like providing or doing mediation analysis to clearly identify the channels through which such impact investment happens and change the life of the poorest. Thank you.
Thank you very much, Gloria.
I want to make a pilot case for microfinance. I know there's been a lot of talk about microfinance not being the panacea for poverty that every one of us hoped. And it's understandable. I understand where the criticism is coming from, because these are not cheap loans. They do charge higher interest rates. And the business case of microfinance institutions, which most of the time actually encourages borrowers to take out loans after loans, may sound a bit unsustainable, but I really do think, I do personally think that it works. After having done more than 2 literature reviews on microfinance, I can safely say that the evidence out there shows that there are massive benefits to microfinance. And even beyond what I've just said, microfinance institutions are the only institutions in Africa who are, or even, I mean, across the developing world, who are actually, that are actually able to extend the outreach to some of the most vulnerable groups, such as women or even young people. So microfinance is really contributing to the sustainable development goals. And I do believe that DFIs like the EIB should continue to support these types of institutions.
Gloria. Leko, last word.
Well, I think what I am impressed by the project and by the things I have seen is how vibrant the private sector is in many of the developing countries. Of course, when we talk about the private sector, we usually talk about the micro private sector, very, very small scale enterprises, individual enterprises, artisans. And the challenge is to develop that into something larger. Now, we saw that the impact of the medium scale enterprises that engaged a lot of these micro enterprises seems to be beneficial. So the model of supporting those medium enterprises, whether it's through finance companies or directly or somehow, is a good way to engage the micro world, the micro private sector. Now, whether out of this micro private sector there will be more that graduate into medium scale, it's something to be seen. But then I think it's a promising model for development, because those micro enterprises need to increase in size, basically. Okay.
Leko, I think unfortunately we lost Hamido, and we will ask him, maybe he can tape his last words, and GDN could put his taped advice to all of us on the website for those who couldn't hear him, to benefit from his learning experience. I think we are at the end of our session. It's been a very interesting session, and I look forward to the next session, which starts in 15 minutes, and it's about managing impact. So thank you so much, the panelists, for your contribution, and looking forward to another possibility for our paths to cross in the future. Thank you so much. Bye-bye.
Bye.
Bye-bye.
Bye.
Bye. Bye-bye.